The wealthiest minds on the planet ask a different question. That is, what is the ratio? Whilst most people ask, what is the return? Billionaires think in ratios, not just raw returns. And that shift in thinking is what makes the difference between chasing profits and compounding power. This isn't just financial literacy, it is the philosophy of asymmetric leveraged generational wealth. Now, most investors focus on returns, 10% ROI, 20% annual yield, doubling your money in 5 years. That sounds smart, but here is the problem. Return to absolute ratios are relative. Absolute numbers tell you how much you made, but not what risk you took, or how efficiently you got there, or even how scalable or repeatable the result is. A perfect example. Investor A makes a 25% return taking huge risk in crypto with 50% drawdowns. Investor B makes a 12% return with stable protected downside and 10x scalability. Now, which one is the billionaire's move? Billionaires think in risk-adjusted terms, not just how much you make, but what you gave up to get it. Let's break down the ratios billionaires love and how they reframe every investment, every bet, and every strategic move. Sortino ratio, not just returns, but downside protection. Most people know the Sharpe ratio, but billionaires prefer the Sortino ratio, which focuses on downside volatility, not total volatility. How much of my return is worth the downside risk I took? It separates speculation from precision. That is why wealth funds, hedge funds, and family offices obsess over this. It answers, is this repeatable, or even is this survivable? Return on time invested. Now, time is the most scarce asset. Billionaires don't just calculate ROI, they measure how much am I earning per hour of attention, per decision, per unit of stress. This is why they delegate, automate, and buy time leverage early. Asymmetric upside ratio. Now, this is the most powerful. How much can I make if I am right versus how much I lose if I am wrong? The best billionaires live in this world. If you can risk $1 to make $20, even if you're only right 30% of the time, you are playing a billionaire's game. It is not about being right often, it is about being wildly right when it matters. Capital efficiency ratios. They ask, how efficiently does $1 of capital produce value? Whether it is in private equity, real estate, startups, public markets. The question isn't, did I win? It is, how efficiently am I compounding? Conviction to exposure ratio. How much capital is allocated relative to your confidence? The richest investors don't spray and pray. They concentrate bets when conviction is high. Limit downside when clarity is low. This is why conviction-weighted portfolios outperform diversified ones in private markets. When you focus on ratios, you avoid emotional investing, build leverage into every dollar, design for asymmetric upside, protect downside first, buy back time and attention. It is a complete reframe. You stop thinking like a gambler and start thinking like a system builder. Billionaires are not chasing returns. They are engineering leverage, repeatability, scalability, and survivability. That is the code. Now here's the takeaway. If you want to think like the top 0.01%, stop asking, what is the return? And start asking, what is the ratio? What is the risk-adjusted path? What is my upside to downside exposure? How efficient is my capital and time? Returns excite, ratios build empires. If you want more decoded frameworks for investing like the wealthy, hit subscribe, drop a comment with your favorite ratio, and share this with someone chasing ROI who needs to start thinking in terms of leverage, efficiency, and upside.